Welcome to the Fleet News Group podcast, your go-to source for expert insights, industry trends, and conversations with leaders shaping the future of fleet, transport, and mobility. I'm Mark Sybil, and I'm thrilled to welcome you to our fourth season in 2025. Over the past 3 years, we've had the privilege of sitting down with key industry decision makers, innovators, and thought leaders who are driving change across the industry. This podcast is your opportunity to hear their stories, challenges, and successes. Wherever you are, whether you're in the office, on the road, or simply tuning in on the go. At Fleet News Group, we're committed to delivering relevant, insightful content. And this podcast is just one way to bring those stories to life. So if you're passionate about the future of fleet and transport like we are, stay with us as we dive into the conversations that matter most. Today's guest is Richard Sandow, who works for Vero as a portfolio manager motor fleet. Richard, welcome to the Fleet News Group podcast.
Thanks for having me, Mark. Good to be here.
Yeah, it's a Friday when we're recording here. This one, it's the start of the year, so you're one of our first guests, so thanks for making the time so early in the year. I'm really interested to learn more about the product we've been talking about, but before I get into it, I just wanted to know about Vero and how long they've been involved in fleet insurance and what sort of products does Vero offer?
Yeah, well, firstly, I'll say Vero is a well-respected commercial insurance brand that actually forms part of Suncorp, which many of your listeners will recognise as one of the largest trans-Tasman insurance companies. And Vero itself offers a broad range of commercial products. So, and those products help businesses and business owners mitigate their insurance risks. And the product, they offer, they're a range of anything from SME packages for, small business to the much higher end of the market, offering, large corporate property and liability insurance solutions. And in addition to this, we offer commercial motor insurance, which is, where fleet comes in. So look, fleet insurance, simply referred to as motor fleet in the insurance world, has been a core product of ours for a couple of decades now. And in essence, it serves businesses and fleet managers that have a minimum of 15 or more vehicles in their fleet. And yes, some of our customers even have hundreds, if not thousands of vehicles in their fleet under the one policy.
And when you say insurance, are you talking about things like the CTP insurance as well, or is that separate? This is mainly about insuring when you have accidents or someone damage to vehicles and things like that.
Correct. Yeah, separate to CTP. So the two core sections of the product are the material damage component, so damage to the vehicle, and the other component is liability. So third-party property, for instance.
Yeah, oh, fantastic. So what's unique about fleet insurance compared to insurance on a private car? Are there different things that fleets require compared to individuals for our personal vehicles?
Yeah, it's a really good question. So when most people think of car or motor insurance, they tend to think of private vehicle insurance. So that's typically your mums and your dads, that own a vehicle primarily used for personal reasons. So things like school drop-offs and pickups and going, to and from the shopping centre and away on holidays. And these policies, generally cover, one or a small number of vehicles, and they may require, listed drivers as an example. Whereas commercial motor insurance is where the business actually owns the vehicle and uses it, primarily for business purposes. So that might be going, to or from meetings with clients, tradies, driving to the job site, or even, specialized vehicles, such as, heavy mobile plant and machinery. That's designed for a specific work task. But in summary, I think broadly speaking, the main benefit of a fleet policy is that it simplifies the cover. For businesses who have many drivers, like there might be employees, directors or contractors, that are regularly driving any one of their vehicles in their fleet. These policies, they essentially cover all drivers and all vehicles as a collective risk, meaning the policyholder doesn't have, the heavy administrative burden And beyond this, it's also something that we call a tailored line or product, which means the cover is usually broader than your standard personal motor policy, definitely with more bells and whistles, and it can be pretty much tailored to any way to suit a customer's needs.
Okay, so things like I suppose excesses and claim limits and things like that. That's where you would tailor it to suit the business and their requirements.
Yeah, absolutely. And then if they've got certain things that they need, so hire vehicle is obviously a really big one. That's standard in our products, whereas that's probably an optional extra or not an option at all. And that's in the event of an accident, of course. You get a hire car to replace your business vehicle,
Which is quite important because you're normally generating revenue or providing service with the business vehicle. You can't be without it.
Yeah, exactly right. Exactly right.
Yeah. So the reason why we're here today is we want to talk about electric vehicles and a new product that you're launching. But before I get into that, I've just got to read the insurance disclaimer because we are going to talk about insurance products. And audience, I'm sorry, I'm going to have to just bore you with this, but you're probably used to it with most advertisements. And this isn't an advertisement, but let me just read the disclaimer, and then we can get into finding out more about your product for electric vehicles. So here's the disclaimer. Before buying insurance issued by AAI Limited Trading as Vero Insurance, please read through the product disclosure statement at vero.com.au and consider whether it is right for you. Target market determination is also available. This information is intended to be of general nature only. Subject to any rights you may have under any law, Vero Insurance does not accept any legal responsibility for any loss or damage incurred as a result of reliance upon it. Please make your own inquiries. I don't think I can get a job as a voiceover expert, but I did my best there.
You and me both.
Yeah. So let's get into the product about electric vehicles. You've launched some exciting enhancements to your motor fleet product, and this is in response to fleets that are transitioning and adopting electric vehicles, because there has been a lot of uncertainty in the market about EVs across a number of areas, and insurance is probably one that they ask a lot of questions about. So have you seen a demand from customers, or are you just getting ahead of the curve with this product?
Again, yeah, it's a good question. And I suppose I just want to take a step back to start off with, if I can. We know globally there's been a seismic shift towards EVs over the past decade, where now 1 in 5 new vehicles sold are electric, and I think that number is supposed to be 1 in 4 very soon. This has mostly been driven by the Chinese consumer market, in addition to the UK, US, and European markets. And I think the best examples probably Norway, where nearly 90% of all new cars sold last year were EVs. So I think generally speaking, it's safe to say that Australia and New Zealand are slightly earlier in the adoption cycle, and even more so, for business owners and fleet managers. But I actually think this is changing as we speak, because if you look at, take leasing, for example. So many of our large novated leasing clients, they're basically struggling to keep up with EV demand at the moment, where I think it's about 50 to 70% of all new vehicle orders in Australia are now electric. And obviously, big driver of this has been the FBT, government exemptions. Whereas, that's a big contrast, as you mentioned, for a lot of business owners and fleet managers, where there's been a bit of a hesitancy around transitioning their fleets. And we know some of these reasons include things like, the upfront cost of an EV. So until recently, the early entrant models like Tesla's were quite expensive due to the new technology. So the lower on-road costs weren't really enough to justify the higher average purchase price as a starting point. Beyond this, you've got the drops in residual values. So EVs typically, the values were falling faster than fuel-based vehicles, mostly due to the battery deterioration, which we know that technology is improving. But that was certainly a resale consideration for prospective buyers and businesses that sell their vehicles and make profit off that later on. And then the last one, that's the obvious one, is that perceived lack of infrastructure as well. So not having enough public charging stations as an example, that owners and prospective owners and prospective buyers who are concerned about the battery, holding charge over long distances. So I guess, what's changing is, the manufacturer market, seems to be at a major turning point where I think 36 brands sold EVs in Australia last year, which we know this is ever increasing with the Chinese car makers starting to occupy a pretty significant market share. So MG and your BYDs are a really good example of that. And we know, China's going to continue to prioritize our market now that countries like the US are introducing, 100% tariffs on Chinese manufactured vehicles, to protect their own local industry, which is something that we, obviously don't have. So I guess what does this mean for, consumers, businesses, and even fleet managers who are considering a transition? You're going to have, increased competition, which, increases your choice. You'll have lower entry prices, and you've got rapidly improving, battery technology. So, and Mark, I'm really conscious this is a roundabout way of answering your question.
Thank you. Thank you. I knew you were getting there, and the background's good for the audience because there's a lot of people. I'm surprised how many people still don't understand where we're at in the EV transition. That some people are all over it because they're evangelists, but other people are still going, really? Is it electric? So yeah. No, it's great to get that background. So back to the question, bud.
So the answer to the question is, look, is there demand for new product benefits for fleets? Like I'll say at this point in time, it's very soon is my short answer. We're early in the cycle at the moment. Most are only considering their options or in the piloting phase. But Vero, essentially, as you mentioned, we wanted to get ahead of the trend and give customers, the confidence to transition, or at the very least, start a conversation with their broker about their EV insurance considerations.
Yeah, actually, you just mentioned broker there. I hadn't even thought of that, but you've got a whole network that you need to educate as well. So it's not like the fleets could be interested. They go to the broker's not aware, and the conversation could stop. But yeah, that's a big part of your business, isn't it? The broker network.
Yeah, absolutely. Yeah, we're an intermediated business, so we often don't have direct access, to the client. So, a big part of what we do is trying to educate the broker network about our products and, sort of showcasing our expertise, at sort of each end of the value chain. If you're talking, our underwriting expertise, versus, our claims service team, which, is fantastic at the moment. So, yeah, we're really happy with that. And, bit of a different dynamic to a direct insurer, that's for sure.
Yeah. So it makes a lot of sense to get ahead of the game early, so the brokers can be aware when their customers come to them. They have knowledge of the product.
Spot on.
That's great.
Yeah, and they're providing professional advice as well. So giving them a good product, that removes any ambiguity around what might be covered or not covered for EVs, because some of those exposures are slightly different. So we want to be really clear on that, and that's the primary motivation for updating the product.
So that probably leads me into the next question. What are the key differences between this product covering EVs compared to a product that just covers internal combustion engines?
Yeah, so from a product perspective, it's interesting. EVs, they're from a consumer consideration standpoint, you've got the environmental factors, lower on-road costs, less maintenance and servicing costs. In some respects, greater performance. So I think consumers often think about those elements, when they're thinking about, going EV. But from a insurance perspective, I think it might confuse people, or it's something that they don't often consider at all. So one of the biggest components to this is we just have to educate customers, right, on what might be some of the misconceptions or some of the exposures. So I'll probably start with EVs. The battery itself is the motor, right? So if this fails or if it runs out of charge, that means your vehicle is essentially stranded. So part of the new benefits, we've introduced an excess-free towing cover in our Vero fleet insurance product, which is to give customers peace of mind that if their fully electric vehicle runs out of charge and they're stranded, we will pay for the reasonable costs of towing that vehicle to the nearest charging station. So that might be public or private. In addition to that, other exposures that they have, the charging risk element is a really big one. So as an example, if you compare charging a vehicle to refueling a vehicle, when you put a fuel hose, into a vehicle, it's usually attended, and it takes no more than 1 to 2 minutes, to top up. Whereas, EV owners, basically plug a charger in and walk away from the vehicle, potentially increasing the risks of trips and falls, as an example. And that's where liability cover can be really handy when charging, particularly at a public charging station. And the other one that's related to that is where there's damage to property while charging is a really big one for EVs. So, for example, if there's an incompatible or faulty charger that causes the battery to combust, might lead to vehicle damage or even third-party property damage. We wanted to give customers peace of mind that they can be insured for these types of exposures that are somewhat unique to EVs.
Yeah, that's really interesting. Like the being stranded and the towing, tick, that's the pretty obvious one. The potential risk of fire and what that may cause, that's a concern. So ticking that off, beautiful. But the trips and slips and falls, I hadn't thought about that. That's a really unique feature. So well done to the team for picking that one up as a risk.
It's all part of the job.
Okay, so one of the big questions we get asked all the time is about the key factors used to determine an insurance premium for EVs. And that fire risk is, depending on which pub you drink at, some people think, oh, they're going to catch on fire, so they're going to be very expensive and everything like that. But some of the conversations I've had, that one of them, because they cost so much, that's an influencing factor to your premium, as it is with any asset, I guess. So can you help us understand, what are the key factors that you use to determine insurance for EVs, and is there any difference to ICE vehicles in those factors?
Yeah, another really good question. I think, contrary to popular belief, we don't just stick our finger in the air and come up with a magical premium overnight. I think there's a lot of different factors that make up a vehicle's premium, and a lot of those actually are quite similar. Whether it's ICE or EV, there are some differences, but broadly speaking, what Vero aims to do above all else is we try to determine the fairest technical premium for each individual vehicle, whether that be like an entry level EV or a high value ICE vehicle. The performance of one class or category of vehicle, that shouldn't weigh on the other. So at a more granular level, some of the components that can make up a premium can be things like vehicle factors. So the year, make, model of a vehicle, in addition to the sum insured value, as you mentioned. Other things are, components that impact claims costs. So macroeconomic trends is a really big one. So, the cost and availability of parts or technology drives a lot of expense. Individual customer performance, of course, comes into it, particularly if we're talking about fleets with thousands of vehicles. Past claims history and performance will weigh on a premium at the end of the day. And other components as well, which the obvious one is cost can be driven by weather events. So if there's a large hailstorm or multiple storms over the course of a year where there's huge amounts of damage at a macro level, that can obviously drive some premium costs, and in addition to broader frequency and severity trends. So what I will say is one of the biggest challenges for insurers right now in maintaining insurance affordability is those macroeconomic factors that I mentioned that are typically just driving up the cost of claims. So one of the biggest is new vehicle technology, which is increasing the cost of parts, in addition to also increasing the total number of parts that are impacted when a claim or accident happens. So what I mean by this is you've got previously where you damaged a bumper, as an example, it was a simple smash repair job, so for a relatively small cost. Whereas these days, if you knock out your bumper, it's got sensors and cameras, and those parts themselves cost thousands of dollars. And then on top of that, you've got when repairing them, there's additional, reprogramming costs to go along with that as well. So there's a big challenge, particularly off the back of COVID, around that supply chain management of those parts and managing the costs of those parts. And this is something that we basically just continue to face as we go through. But at the end of the day, I think the benefit is large companies like Vero, we can leverage our really expansive repairer network, which continues to grow and improve. And what that means is improves our overall ability to service claims in timely manner, and gives us the best possible opportunity to get businesses and customers back on their feet.
Yeah, the bit you were talking at the end there about safety technology, I'm having a lot of conversations with fleet managers that they're seeing that it's reducing the number of incidents or small incidents when autonomous braking and things like that are helping. But yeah, the cost, as you mentioned, there's sensors, there's cameras, there's radar units, LiDAR units, there's ADS calibration, even a simple windscreen now with the way cameras and everything. It's not a $300 windscreen anymore. It's a $1,500 windscreen. So it's really changing, isn't it?
Yeah, spot on. And a lot of what we sort of talk to is, the average claim size. If you look at maybe a couple of years ago, it might have been $2,000 to $3,000, whereas now you're talking, $5,000 to $6,000, for essentially the same types of claims, with the same level of frequency. So it's difficult to manage, no doubt. And of course, that does obviously impact a premium at the end of the day. But what are insurance companies there for? And that's to make sure that we're paying as many claims as we can and getting businesses and customers back on their feet.
So yeah, Richard, one of the other things you mentioned there when you were explaining it was about the driver behaviour and the past claims rate. And we probably don't have time to get into that now, but there's probably lots of fleets I talk to. There seems to be a really good case to implement driver training systems, use telematics, and using technology to help improve the driver behaviour and reduce claims. Is that generally something that Vero recommends that organisations look at?
Yeah, it's very early in that phase. So if we talk telematics, for instance, there's a lot of conversations around, well, you can learn a lot about a driver and the safety of a driver by the telematics, which can essentially be like a black box for a motor vehicle. And I think at this stage, it is something that insurance companies are looking at to see if we can incentivize customers, that are good drivers. We want to be able to lower their premiums, in the event that they are a good driver. And look, I think at this stage, it's probably too early to predict what the next 3 to 5 years looks like, but certainly with the uplift in technology, that's going to have a massive impact on the way insurance works over the next decade.
So, if I would summarise it and say that if you've got good safety cultures and good driving behaviours and less claims, then your insurance premium is going to be cheaper, regardless of whether it's an ICE or an electric vehicle. By the sounds of it, is what I've heard from you.
Correct. Yeah.
Yeah. Oh, excellent. So I'm going to have to ask the question, and this is probably something all the audience is waiting to learn about. And we've touched on it briefly already, but EV fires. Should we be panicking? What's the view on EV fires? You've obviously across a lot of the data, not just here but globally. What is Vero seeing, or what are you seeing in that respect?
Yeah, so thermal runaway, for lack of a better term, is that's one of my favorite topics to talk about, actually. And we've done a lot of work with other insurers around the globe, particularly a Norwegian insurer, to learn a lot about what is the risk, from an insurance perspective, but also from a customer perspective, when it comes to EV fires. And all in all, I think EV fires are probably one of the biggest misconceptions for EV owners and prospective buyers, and insurance companies for that matter, just a few years ago. And most of this concern has been driven by the media publicised every major event that occurred, while remaining somewhat silent on the more common combustion engine fires. So in terms of some stats, for example, we've got between 2010 and 2023, there were a total of 6 reported EV fires across Australia. Now, over the same period in New South Wales alone, there was 3,000 ICE vehicle fires. So I think the data at this point is pretty irrefutable that locally and globally, EVs, the risk of an EV fire is much less than an ICE vehicle. And the other thing I want to mention as well is of those 6 EV fires that occurred, it's really worth noting that 0 of those were actually spontaneous, meaning all of them were actually unrelated to the vehicle itself. And they were rather caused by impact or damage to the battery, or it might have been a charging issue. So, but look, that said, I think we're talking about an individual accident or an individual loss. We know that the severity of damage that can occur to the vehicle or surrounding property, for that matter, can be a lot worse because lithium-ion batteries, they run much hotter than the typical engine, so it can run up to 1,000 degrees Celsius, and they require significantly more suppression in order to put out. So, of course, as an insurance company, this is something that we'll continue to monitor. Broadly speaking, but it's not something that we're overly concerned about from a claims cost or frequency perspective, meaning it shouldn't have a large downstream impact on premium affordability.
Great to bring some sense and logic and data to the conversation on EV fires, but the audience didn't get to see my face when you read out that statistic of ICE fires. So, sorry, in New South Wales, it was 3. What was the number? How many fires?
3,000.
Wow, that's amazing. So, yeah, I need to get down to the pub and onto Facebook and share that figure a little bit more to bring some more balance to the conversations. So Richard, just one last question. I probably should have asked this earlier, and because it really is, I like to ask people to find out where their thoughts are. And with all the research you've done developing this product, you guys have probably got a pretty good insight to where the market is going. So where does Vero see the EV market heading in probably in Australia more specifically over the next 5 years?
Yeah, so I would anticipate that consumers, businesses, and fleet managers over the next 2 to 5 years, especially, they take full advantage of the increased car maker competition, particularly entry-level models, and Chinese manufacturers. So BYD in particular, they've actually got a 2030 goal to outsell Toyota in Australia, which we all know is a very bold ambition. But I think if these manufacturers can increase, part supply, their service capacity and expertise, particularly locally, and continue to improve battery technology and introduce an array of light commercial vehicle options. So utes and vans in particular, which dominate the Australian market and particularly dominate, our customer base. I think the market would likely respond to that. And beyond the manufacturers, I'd also predict, probably more frequent and improved government incentives as well. So a bit like the FBT exemptions that we have right now, but instead, to support businesses, looking to pilot or fully transition to electric. And this is something that we've seen in other countries, like the US, and even New South Wales last year had an $18 million pool to incentivize, businesses, looking to pilot or transition to EVs. So, but again, I think this is just only the beginning, and the last piece of the puzzle as well, obviously, to give those Australian consumers, peace of mind, is bigger investment piece around improved infrastructure. So particularly charging infrastructure, for those longer trips, because we all know, Australia is a big country, and if you're traveling from Sydney to Canberra, which is a long drive, you definitely want plenty of charges, to make sure that you get from point A to point B with no stress. Yeah,
excellent. No, that's really interesting to hear. It sounds like it's all the challenges need to be resolved before we can really reach that tipping point. And whether you're a fleet or a consumer, the challenges are fairly similar. So that's great to hear that that you guys are thinking similar to most of the other experts in the industry. So, well, yeah, thank you. All right, well, we've just about run out of time, so that's a wrap for this episode. Richard, thanks very much for being a guest. Really insightful, and I think there's some great information on electric vehicles, but also some general insurance information on how people can reduce their claims and reduce their fleet operating costs. So that's fantastic. Thanks for sharing that. Thanks for our audience for listening. If you found this discussion insightful, don't forget to subscribe, share, and leave us a review. We're on Spotify, Apple Podcasts, and YouTube. You can find the show on any of those platforms. And you can also stay up to date with the latest industry news by visiting any one of the Fleet News Group websites. We have Fleet EV News, we have Fleet Auto News, and we have Fleet HV News. And look out for the Fleet News Group magazine that comes out every quarter, and you can find it in Qantas Club lounges and most of the other major fleet management conferences and events around the country. So we'll be back soon with the next episode with more insightful experts discussions. So until then, drive safe and stay informed.
You've been listening to Fleet News Group podcast. It was edited and produced by Isabella Fiorentino. You can follow us on Spotify. Just search for Fleet News Group. We're also on Instagram, Facebook, and YouTube. Our website is fleetnewsgroup.com, where you can get all of our stories, videos, and podcasts. Until next time, drive safely and take care.